Back in the action here once again. It's about that time of day again here, folks. Time to get back to work. It's Thursday evening, October the 10th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance for tomorrow, the best entry and exit points for tomorrow, and most importantly, identify where some easy traps to avoid so we can keep growing our account in tomorrow's trading session. And we got a lot to cover here tonight. We'll take a look at the calendar here to start off the video tonight. We got a bunch of big pending news coming tomorrow. We'll talk about that here in a moment. Then we'll grab some charts. We got some crude, S&P, Nasdaq, and of course we'll wrap up on that yellow metal, the gold futures tonight. I'm going to start off tonight with the black gold though, the Texas tea, the crude oil futures. Oil is breaking free of that range. We spent most of the day today. I think they have their eyes on that gap from mid-September. Let's grab that oil chart, get that black gold going, that Texas tea, and let's get this video off of the races here this afternoon. Now, of course, what do we know right now on oil? We know oil is bullish, that's for sure. We also know oil is 3 legs up, 1, 2, and almost 3 legs up. So we got a pretty good idea of where those buyers are trying to go right now. As you can see here, those buyers, of course, right, are coming out of a very contained market for most of the U.S. session today. Now, of course, this appears to be what I would call an impulse move, right, or a spike in the market. Those impulse moves actually give us 3 different scenarios that I want to be ready for here tomorrow. I've got that measured move target overhead. I've got that mid-September gap overhead. We know where these buyers are trying to go. I've got 3 scenarios I'm watching for here tonight as this market jumps, right, and tries to finish off that triple measured move and to fill that gap from 915. I'm also aware of this range, right? And if we do tumble back down into that range, boy, oh boy, hopefully we get this. I'm not expecting to get this tomorrow, but hopefully we'll end up right back down into that range. And I've got some great spots down there around 53, 52.80 to be more specific to be a buyer here. I'll talk about 3 different buy patterns I'm watching for on the oil. So if you're looking to be a buyer on oil right now, or even be a seller on oil for that matter, we'll talk about the buy side, the sell side, and we'll cover all the details tonight here on this crude chart. How about some S&P here? S&P also getting one of those kind of impulse moves as we go. We'll talk more about, right, those 3 scenarios that we use to trade those kind of impulse moves, right? We'll talk about 3 things to keep in mind as the market goes higher here tomorrow. What do we know about the S&P right now? Very similar to oil. 1 leg up, 2 legs up, 3 legs up. Oh boy, 4 legs higher here. Okay, so we know where the market wants to go. 4 legs though, 4 legs. 4 legs there's a personality we oftentimes see around a 4-legged move or a quadruple, right, measured move. We'll talk about that in a lot more details here. I'm looking for those 3 possible scenarios as we go higher. We'll dive into details on that tonight. Also, if we end up back inside this range, we'll definitely plan for potentially another range here for tomorrow. Or, right, if we collapse right back down in, I think buyers are going to be waiting down in that 29.25, 29.20 area. That will be a pretty deep pullback, and we'll talk about 3 specific patterns that will harness the momentum of the bears while giving us a chance to buy right off of that battle zone. We'll talk about the bull side, the bear side, the sideways range-bound side. We're going to cover all the details tonight here on the S&P. The Nasdaq, of course, is very similar here to the S&P here this evening, right? You got that 1, 2, 3, 4 legs up. So we know where the Nasdaq is trying to go. Big, strong impulse move here as we go. I'm going to give you guys 3 different patterns to look for here as we go. But what if we drop back into that range? We'll talk about how to trade the range, and of course we'll also talk about how to use some of these key levels of support down here. Man, I hope we get that pullback here tomorrow. I think everybody hopes we get that pullback right here tomorrow morning. So we'll talk about the pullbacks. We'll talk about as it goes higher, and we'll talk about, bull side, buy side, sell side, right? All the details we'll cover here tonight on the video. And of course, wrapping up tonight on the yellow metal, on the gold futures, we, of course, coming out of that range. Gold is still a range-bound market. They went up, tried a couple times, and came down. Now, there's no doubt about this. We know the bears are very strong going lower right now, but this range is still very much intact. We have not confirmed here yet with what we call the 1, 2, 3 breakout. So as of right now, what do we know? We know the market is still range-bound. There's a very bearish tone to it, though, right now, isn't there, right? With trade talks going on right now, it definitely feels like this gold is pinned to the floor here. But there's that 2-try rule below the low of that range. That 2-try rule right now tells me I've got one very specific pattern I'm looking to buy back up into that range. Range-bound markets, of course, tell us to buy low, sell high, and avoid the middle. But what if I'm wrong, right? What if the market keeps going lower? We'll take a look at some targets waiting down here. We'll also talk about what I need to see to be confident to be a seller here tomorrow, because as you can see, there's quite a bit of support down here that we really don't want to try to trade into. So looking to be a buyer, but because we're so bearish in the short term, I've got to be very careful with which buy patterns to look for. So we'll talk about my favorite reversal pattern tonight on the gold, and of course we'll talk about if the market wants to continue this momentum going lower and the best way to trade it. Got everything ready to go tonight with you guys. Got the gold, the Nasdaq, the S&P, the crude oil. Before we jump into the video tonight, though, before we break this down into all the small bite-sized pieces, I just want to remind you guys to make sure you join our mailing list. Joining the mailing list is very, very easy. All I need is your name, your email address, and then hit that subscribe now button, because when you join the mailing list, you'll be the first to get that email every evening when this nightly newsletter goes live. So make sure you never miss a great video. Right before I publish this video, I fire off an email to everybody on our mailing list. I want to make sure you get that email. Give me your name, your email address, hit that subscribe now button. And don't forget, guys, when you hit that subscribe button, your job is not over yet. You still need to go into your email, check your inbox for that welcome email. That welcome email has a verification link in it. I need you to grab that welcome email, verify you get that link, and don't forget, sometimes that welcome email gets stuck in your spam filter, so make sure you white label us, right, or whitelist us, right, if you find it in your spam filter. Also, how about questions here tonight? Any questions, concerns, comments, feedback? Down in the comment section below, guys. I'm always encouraging you guys to drop those questions in the comment section below. If you're here for the first time, or maybe you've got a question about anything we talk about in today's video newsletter, please don't be shy. Drop those questions down in the comment section below. I'm always answering questions down in the comment section. Or maybe you've got some feedback for me, right? If you were in charge over here, right, how would you run this newsletter? What would you do more? What would you do less? Which markets would you add? Which markets would you remove? Is there anything that if you were the one calling the shots, is there anything you would change about this nightly newsletter? I would love to hear from you guys. Drop those comments and that feedback right in the comment section below the video here tonight. And while you're down there, right, do me a big favor, will you? If you tune in every evening and watch this video every evening, hit that thumbs up button here on YouTube for me, because every time you hit that thumbs up button, YouTube rewards me by exposing this video to more traders who are dying to learn a great trading strategy like we talk about every evening on this newsletter. So thank you so much for your ongoing support. Thank you for sharing these videos, subscribing to our channel. Hit that thumbs up button. Help me expose this video to more traders who can definitely benefit from this knowledge as well. And don't forget too, if you're not really up for the comments section, give me a call in the office. I'm always here in the office. I got live support in the upper right hand corner there. But maybe you have questions about the best brokers, charting software, data feeds, or maybe you want to know how to get access to our trade room on your free pass or as part of your free trading course, right? Call that toll-free phone number, use that live support tool, and we'll be there to answer the call, answer all your questions. That way you don't have to go out there into Google land and go searching for God knows what, right? Call me in the office. I'll give you the information you need to make the right decision up front. That way you're not wasting time, losing money, and getting frustrated like I know most of us did when we were rookies as well. So call me in the office. Drop those questions in the comment section below. In the meantime, let's get this party moving. Train is leaving the station. Tomorrow, of course, is the last day of the week, right? Second week of the month of October. Now, we've been talking about this all week, right? Next Monday is the Columbus Day holiday. Markets will technically be open on Monday. The CME group doesn't close the markets like close the markets very often. There are a couple times a year when the markets are officially closed for business, but the markets will be open on Monday. Just be very careful. Monday being a federal holiday here in the United States, schools are closed, banks are closed, right? There's parades and stuff going on, right? So you know there's going to be a lot fewer people in the market on Monday. If you do choose to trade on Monday morning, be very, very careful. Early in, early out. I would say from probably 9:30 to 11 will probably be the hour and a half you'll get on Monday next week. So be very, very careful. I will not be trading on Monday. Our trade room closed on Monday, and there will be no newsletter right on Monday evening as well. That means tomorrow is a trader's holiday. And with the Friday ahead of a long weekend, we know that most traders are going to get to their desks early tomorrow, and they're going to have their eye on the time to get out of that office, right? Hit the train, hit the bus station, right? Get on an airplane and get out of town for a long weekend. So a lot of traders will be kind of 1 foot at the desk, right? 1 foot out the door tomorrow, especially since we've got all of this hoopla surrounding the U.S. and China trade talks. Boy, I'll tell you, President Trump really, you can tell that guy was on television for a long time, right? Because he did a love him or hate him, he did a great job today kind of making that must-see TV for tomorrow. I'm watching these headlines and I'm going, this guy knows how to stir a crowd up. He's getting everybody all excited about tomorrow. At this point, it does sound, though, like it's going to be a little bit of a watered down, maybe not watered down, but an abbreviated trade deal, right? Trump obviously wants as much as he can get, but I think he's going to rather end up with a little bit of currency, right? A little bit of ags, and who knows, right? Maybe we see a surprise here tomorrow, but it does sound like everything is going positively here. But, we've seen this before, right? If I've said this once, I've said this dozens of times. Everything seems to be going positive, but who knows, right? We seem to be one tweet away, one headline away, one whoops, right, away from a big market crash or a big market rally. And that's why the theme of tonight's video is trading those impulsive moves, right? Those impulsive moves. So again, going into a holiday weekend, going into a weekend where we've got a big maybe it's an announcement tomorrow. That's the problem, right? We don't even know. There's no real, maybe it happens tomorrow, maybe it doesn't, who knows, right? But we definitely have all of the anticipation at a fever pitch level here right now. You would think it's the Super Bowl tomorrow for trade talks, but the bottom line is really anything is on the table tomorrow. But be aware, Friday mornings, early in, early out. I think the hardest part tomorrow is going to be closing up shop relatively early, because what I would expect to happen tomorrow is the markets will likely be quite jittery at the beginning of the day as everybody's trying to wait for that next Twitter announcement, right? Or wait for the next update, or wait for whatever comes out on the news feeds. So I have a feeling tomorrow morning early will be relatively choppy, relatively difficult, I would imagine. The thing is, though, if we get some sort of breakout news tomorrow at 9:30, it could be a nice 2-3 hour morning, right? From 9:30 to 12, right? It could be a really good morning towards the end of the morning. But if they wait until the afternoon, right? If we don't hear about this until 1:30, 2 o'clock, half the market will already be about a six-pack into their weekend, right? And it won't be easy to trade that reaction. So my best advice tomorrow is, what I plan on doing tomorrow is trading very, very carefully. If I see something that is just easy pickings, we'll grab it. But at the same time, though, if it's grinding out there and really choppy early in the session tomorrow, don't force it, because you know what everyone's waiting on, right? They're waiting on the main event, right? That announcement from Trump and the vice premier, right, Lou, tomorrow out of the White House. And again, we don't know when that will happen, right? Might happen at 9, might happen at 10, right? Might happen at 2 o'clock in the afternoon. It might not happen at all. If it happens early enough in the day tomorrow, will definitely be tradable opportunities. If it happens late in the day tomorrow, it's going to be a lot more gambler's mindset. So, I would say, like always, get to it early. Get out of there early. If they wait till the afternoon, it's very difficult to trust the price action you're going to see on a Friday afternoon because of all the emotions that go along with it. So obviously we got some small news tomorrow, but I mean, come on, who? Kashkari who, right? Nobody cares about this stuff tomorrow. They care about one thing tomorrow, and that is, right, this trade deal. So tomorrow morning, all hands on deck. We're going to really kind of hurry up and wait tomorrow. Keep your eyes on the time, right? And as always, don't forget, Monday through Friday, 8 o'clock Eastern time, in our trade room, right, we get together and we execute the strategy together. Let's grab some charts here, right, as we go into the great unknown ahead of this holiday weekend, right? We get some oil, some S&P, some Nasdaq, and of course the gold here tonight. I'm going to jump in here on the oil here this evening, but really what I want to kind of make sure we talk about here right out the gate is that when we do get some sort of headline here, we do get some sort of information here, we are probably going to see, right, those impulse moves. Now, what's an impulse move, right? Impulse moves are called spikes, right? Spikes are impulse moves. The market's going wherever, right? And all of a sudden we get that strong, right, impulse move. Now, that strong impulse move, there are really 3 kind of patterns that I always try to look for when it comes to these impulse moves. One of them is that 2-try breakout, right? That strong move up, and once you see this thing start ripping higher, I wait for those bears to try once, bears to try twice. I know stops are sitting right there, and look to buy into those stops. Right? I call this a 2-try breakout pattern. It's usually used in range-bound situations, but because we got this big potential news tomorrow, right? If we hear news headlines come out and the market jumps, wait for those bears to try once, wait for the bears to try twice, right? The first pullback, usually profit taking. Second pullback is the one that you really want to wait for. And then once those second try sellers come in, right, you get that strong run through those stops as we go. This is called a 2-try breakout pattern, breaking out of consolidation, breaking out of whatever range we're in at that time. And this can, of course, happen both bullish, right, or bearish. Another pattern you want to think of here for an impulse move, right? Get that impulse move going higher is that 1, 2, 3 breakout, or what we call a spike in channel, which would be a strong impulse move up, that pull back down, and a follow-up leg going second. At that point now, I'm going to mark up these 2 highs, mark that low, mark this high, and that creates this kind of sweet spot, and that area now is where I'm looking, right, to buy that pullback. You'll notice in this example, we're getting in a lot later in the process. So in these types of moves, the initial move may not be as dramatic, or you may have already gotten in on a 2-try breakout, right? Imagine, right, the 2-try breakout happens right there, and you're now, of course, later on in the process, right, getting in at the low of that, again, kind of hidden channel. Another thing we've seen a lot lately, which may be in store here in the short term, so really pay attention, is if we get that impulse move running up and then we start chopping sideways. Right? Start chopping sideways. This becomes a range-bound market, a bullish market with a range. Now, once we know the size of that range, this is the secret. Once we know the size of that range, I can use that trading range now to copy and paste down and find a key level of support down here. So once you know where that range is, then you can add what we call range expansions and find that level of support. Once you find that level of support, now just simply wait for a pullback, what will happen is the sellers will usually come in and try to sell that pullback, and we'll then look to buy into their stop losses, right, and basically buy a breakout pullback failure below the low of that trading range. So again, a quick recap here. If we are, and it doesn't look like that right now, but if we happen to be bearish tomorrow, right, one plan is that strong move down, right, strong impulse move down, one try for the bulls, two try for the bulls. You're literally selling into those stop losses. That is obviously the most aggressive version of this pattern, which means this initial move down needs to be very, very strong. The second pattern would be, right, that impulse move lower, 1, 2, 3. This one, that initial move lower won't be as dramatic, right? It won't be as strong, right, as the previous example. You're going to mark up that low, that high, right, and look for that sell off that, right, off that sweet spot. Or third scenario is we get that impulse move, right, bam, right, big move down. We then start seeing the market go sideways down here. We take the size of that range again, right, size of that range, copy and paste it. That's going to create that key level of resistance for you now. I wait for that level. Basically, I wait for the range. First of all, I find the range. I find my key level of resistance. I look to sell going with that bearish momentum. I'm looking for a move up. Buyers will try to buy that breakout pullback. We look for that breakout pullback now to fail, and we're selling back on through. So those are the three scenarios. 3 bearish, obviously, 3 bullish. They'll work in both directions. But as you can see here on crude oil right now, right, as we go higher here, you can see examples of this, right, as we go. So what do we know about oil right now? We know we've got these bulls in control. We know we want to be a buyer at a level of support. Okay, but we have this strong breakout going higher. So clearly at this point, we've got that trading range, right? Bulls go up. They bounce around inside that range for a bit here this morning. Now they're breaking out, right? Nice strong impulse move. I won't get off track with the details of why they're breaking out. As you saw today, it was basically headline after headline after headline. It was kind of like a barrage of Twitter, right, and headlines today that kind of beat these markets up all day today, right? There were a couple really good patterns, but for the most part, though, the markets really got, they got kind of tossed around, right, from headline to headline. That strong impulse move right now, do we keep going higher for that 1, 2, and go, right? Do we run up 1, 2, and 3, mark up that high, mark up that low, right? Is that the third scenario? Or do we run up and then into a trading range and buy underneath that range? Okay, so hopefully now you can see kind of how I'm structuring this, right? And a lot of the reason why I'm making that kind of the main theme tonight is because we're expecting there to be some headlines tomorrow, and I want you to be ready for that, right, once we get there. So again, those 3 different scenarios here as we go higher, right, strong move up, 1 try for the bears, 2 try for the bears, and finishing off, right, that measured move, 1, 2, and 3. I do assume, I almost ignored the measured move. I do think the measured move is there, but I would have to assume that gap from September 15th, right? If you go all the way back in time here, that is that big drone, right? That's that big drone strike, right? That big drone strike attack, right? Up in Saudi Arabia. That will be a big mental milestone up there at September 15th, right? At that 54, 58. As we go higher from there, if we really start cooking tomorrow, we're talking 56. I would imagine 56 will be on our radar if this market blows right through those overhead levels of resistance. So we know we're bullish. I've got 3 scenarios I'm watching for here on the oil as we go higher. But what if we go lower here? First of all, how do you sell this market lower? Could you sell it? You could. You definitely could, right? You're up inside that battle zone. It's a real strong bull market, though, right now. So I wouldn't recommend selling it too aggressively, but what I will look for is for my favorite reversal pattern. It's called a crown reversal. Strong move up, gives the bulls control. If you want to be a seller, you've got to let those buyers try once, try twice, and I'm looking for a trap here to sell back down. I call this a crown reversal pattern. These are very reliable reversals, right? They're very reliable reversals. You can almost see a variation of that going lower, right? We go lower, the bears try once, the bears try twice, and there's that trap low right there, right? That's a good example of a crown reversal going higher. And hold that thought too, by the way. That's very similar to what we're looking at on the gold here for tomorrow as well. So we'll talk about the gold here, right, in a moment. But for right now, though, right, we know we're bullish. We're above that trading range. This is a relatively recent spike higher, right? Relatively recent impulse move higher. As we go up, if we do want to go back into that range, because remember, ranges are balanced markets. The buyer's going to try a couple times. Once, twice, and of course, looking for a trap high so we can sell this puppy back down into that trading range. What if we don't get it, right? What if it runs back into the range and starts going sideways? Well, at that point now, it's just a simple range-bound market. There'll be a little bit of a bear bias to it, but overall, it'll be bullish as well. What do we do with a range-bound market? We use the size of the range to find our buy zones, to find our sell zones, and what pattern do we use? We use the two-try failure pattern, right? We let the breakout once, we let them try twice, and we buy back up from there. We let them try once, we let them try twice, and we sell back down from there. The bears try twice. The bulls try twice. We're buying low, we're selling high, and again, make this very clear here, this is only if we go back into that range and start trading sideways again. Okay, what if we don't go back? What if we run through the range? Then what do we do? Right? What if it pulls a gold and it runs right down to the low? At that point now, we're now back below the range. We're in that buy zone down there, but that's going to be one hell of a bear move, right? So if we just ignore that range now and we make a run lower here, I've got some great areas of support down here, right? I love to buy in this area, but unless they take a pit stop inside that range, this is going to be a very strong bearish momentum. Now, what do we do how do we buy, right, when a market is really strong on that pullback? We use a slightly different variation of the failure pattern called a nested failure. In other words, I know the sellers have momentum on their side. I do want to be a buyer, but I want to sell now only after one attempt, two attempts, and then back up from there. Make sure those bears try two clearly separate tries there, and then we can buy this thing going back up into that trading range. Now, how does the market officially turn bearish? We got to go underneath the range, hold a pullback, and jump off that range low. Right? We have to get back underneath the range, hold the pullback, and go. That's called a 1, 2, 3 breakout, right? The moving average will come over, see a strong move down, see the test of the moving average, and a strong move off of it, right? Now, why not just sell that pullback? Well, because it's not a bear market at that point. It's a range-bound market at that point, right? When ranges show up, it means the market's balanced. And we've got to see proof now these bears actually have the guts, right, to control this market. So we wait for that strong move down. We pull back to a falling moving average. We wait for that personality jump off of that low. Now we mark up that low, find that trend line, find our hidden channel. That creates our sweet spot. And we're selling back down to retest that low now at 51.38. So once again, a quick recap here, right? As we go higher, strong move up, one try, two try breakout failure pattern, right? Two try breakout pattern. Or we go 1, 2, 3, marking up that high, marking up that low, buying off that low. Or what I think we might get here for tomorrow, strong move up because these markets have been so impulsive. Head to this news talk, wait for your range, one try, two try, buying back up using that two try failure pattern. If we run back into the range, right? Pit stop back in the range, one try for the buyers, two try for the buyers, selling back down in, one try for the sellers, two try for the sellers, buying back in. Or do we just take off the downside? If we do, one try for the bears, two try for the bears, buy back up into the range, Okay, range is the priority. Or do they hold that pullback? If they hold that pullback and run, now we know 1, 2, 3 reversal, 1, 2, 3 breakout, mark the low, find the sweet spot, and sell off that high. Now we've got all the bases covered for tomorrow, right? We're waiting on the trade deal now. We're waiting on more headlines. And remember, please be careful tomorrow. It's a Friday. Do not let your emotions get the best of you. We're all looking for some opportunity here tomorrow. But again, be patient, be optimistic, but be patient, right? Just be aware. We're going to take whatever the market gives us. We don't want to force trades tomorrow morning. Now, speaking of forcing trades and all kinds of other rookie mistakes, right, that we make as traders, I think I could write the book on how to lose money in these markets. I have made, I think, every mistake you can possibly make. And I'll tell you, I put a lot of those lessons in my free trading course. In the upper right-hand corner, I'll put a link for you guys in the upper right-hand corner to get registered for our free trading classes. Now, in that free trading class, I teach you my 3-step strategy, my 4 favorite entry patterns. You'll see hundreds of examples of things like 2-try breakouts, 1, 2, 3 reversals, right? You'll see great examples of how we apply that strategy to our favorite futures markets. And like I said, I talk a lot about some of the most common mistakes and some easy ways to avoid those mistakes when you're early in your career. Grab that free course. It's linked up in the upper right-hand corner. Or if you're here on the blog at sidewaysmarkets.com, I'll put a big red button right below this video on our trading blog. So grab that free course, and I'll see you inside the members section of our website at School of Trade. In the meantime, let's keep this party rolling here over to the S&P here tonight. S&P, as you can see here, is also bullish. What do we know about the S&P? We know the S&P is bullish. We also know the S&P just tested its high of day here today, a very, very bullish sign from the Emini right now, considering the fact that only about 24 hours ago, the headlines in China were reading this trade deal was dead. Right, I think they teed that thing up here, right? I think somebody had a fortune out of China, right? I'll bet somebody got paid off to put that headline out there, that bad headline late last night, because surprise, right? It came all the way back up from there. Anyways, we know we're bullish. We know we're back up to retest the high. Not a very good spot to be buying up here, right? Not a very good spot to be buying up here. Not a great spot. You're back up at that high of day. So not a great spot here, but we definitely see we got that impulse, right? That impulse move. So we know the market's bullish. We're not quite at a good area to be buying right now, right? But do we get those 3 scenarios as we go higher, right? Do we get that strong, right? Impulse move up, 1, 2, keep going, right? Do we get that 1, 2, 3 break higher, mark up that channel, right? See where I'm going with all this right now? These impulse moves, if we continue to break higher here, if we continue to have these strong jumps right now in the back of headlines, right? Or do we jump up and start going sideways up here? Right? If we jump up and start going sideways up here, what do? We find those support levels below the range, and we use that 1, 2, right? 2-try failure pattern, right? 2-try buy pattern off the low of that trading range. A very, very interesting chart here for us right now. Where would they be trying to go, right? If they can run this thing higher here, where's the next target? Next target's way up top there, 29.95 and change. That is the next big milestone here overhead. So if they do get this thing, cooking higher here, again, everything right now sounds very optimistic about this trade deal tomorrow. We shall see, though, obviously, right? We'll wait to see what we actually get here for tomorrow. The bottom line, though, is right now we're not at a good spot for it at this point, right? Do we see that strong move up? Right, 1 and 2, buying into stops, strong move up, 1, 2, 3, right, find that hidden channel, buy off that hidden channel low, or do we jump up, rattle around sideways up here, find that range, find our support level, it's 1, it's 2, and we're buying right underneath that range low? Or do we end up coming back into that range again, right? How could I sell this market it's a range-bound market. We've talked a lot about ranges right here this week in the newsletter. Strong bull move up into a very, very tiny right trading range. You'll notice this range uses a slightly different technique of finding the buy zones and the sell zones. I'll give you a hint. I talk about this quite a bit in our advanced classes. The size of that range, right? See how small that range is? This might be the smallest range you'll see all year, right? What is that, 3-point range? Yeah, pretty pathetic. Small ranges tell us use wider range expansions. We'll talk more about that inside the free classes. And of course, we'll go into a lot more detail inside of our advanced course here at School of Trade. But we know right now, though, we're bullish. If I want to be a seller on a bull market like this, what do I need? We know it's a range again, right? It's not so much a trending market, right? It's a range, right? So we know we're looking for the 1, right? The 2, and back down again. If I want to be a seller in a bull market, I want to use that crown reversal pattern. Let the buyers try once, lower low, try twice, trap high. Let them try once, let them try twice, trap high. You can see an example of right back here, right? They go once, they go twice, trap high, and go. Same thing. Okay, so we go up, pull back once, pull back twice, trap high, and sell it. Okay, that's your crown reversal to be a seller going back down now into that trading range. What else? What if we go back into the range and start going sideways again? God, I hope we don't. I hope we don't spend most of the day tomorrow in a 3-point trading range. But hey, anything's possible. It's a holiday Friday, basically. Find that range, obviously. We know the ranges. We know where our buy areas are, right? I want 1 try for the bears, 2 try for the bears, buy it back up, 1 try for the bulls, 2 try for the bulls, sell it back down, right? Bears try twice. And basically what this is, guys, is if we do end up back inside that range here, what you're doing is you're anticipating, okay, there's my range. When I break down, you know that rookies are going to come in and try to grab that breakout pullback, right? Rookies love breakouts, and the one thing they like more than breakouts is breakout pullbacks. I loved them when I was, they're not going to make any money, right? But rookies, for whatever reason, it takes them a couple of years. I was the same way. I don't know why, but I spent a good year and a half trying to crack the code on trading breakouts, thinking that some indicator, order flow, market profile. I tried every single technique to qualify a breakout. And then I finally, after about 4 years of losing money by myself, I hired a coach, and the coach is like, bro, what are you doing trading breakouts? So haven't you learned yet breakouts don't work? And I'm like, I thought maybe if I had a MACD divergence, right, that would be a good breakout. No, it's not. Breakouts are very easy to see in hindsight, but very difficult to trade reliably over time. Because they're so easy, because they look so basic, right? Rookie traders love them, right? Don't try trading breakouts. Look for those breakout pullbacks. And once you get those breakout pullbacks, right, now you know, again, it's a bull market. It's not a bear market at that point. So sellers who are trying to sell with that breakout pullback underneath this range are just foolish, right? It's a foolish trade. It's an impulse trade, right, really more than anything else. We get some great levels of support down here, right, as I mentioned earlier. So again, if we do go back into the range, okay, that kind of balances momentum out. I now look for 1 try, 2 try again. It's really just a seller failure, right, off that moving average back up into that trading range. And maybe we get lucky, right? Maybe we get a failure. There's a combination of these, a failure into pullback combination, right? So imagine now, right, we run lower. The bears, they try to sell that breakout pullback. We're buying into their stops, right? That's round 1. The moving average comes over. They pull it back. Round 2 is that pullback. Very, very common, right? Very, very common. Pullback failure into pullback success, going higher there, right, for those bulls. But what if we really collapse, though, right? What if we really collapse here going down? If we really take a nosedive here, then what do? Again, we know we got some great levels of support back here. We know that's there. But now that momentum is pretty concerning, right? Yeah, it's overall a bull market. And yes, I do want to buy underneath a range, right? Range-bound markets, buy low, sell high, avoid the middle. But that momentum is just too much. What that momentum tells me, if we don't take a pit stop inside that range, is that you're probably not going to see those bears give up without a fight. right? They're going to try once. They're going to try twice. And once you get the bears trying twice, as long as you're not inside of that range, that's the problem, right? With these narrow ranges, you don't want to trade inside the range there. As long as you've got those two tries coming in, that will absorb all those bears. Now you know right where their stops are. You know right where their pain points are now. And now you can buy right into that pain point, right into where if you were a foolish breakout seller, where your stops would be, right? So you talk about avoiding losses for tomorrow. Don't try trading those breakouts, those breakout pullbacks. If I have it my way, we'll get those breakout pullbacks to trigger, and then we can buy it right back up into that trading range. Now, don't forget, if they do get that big run lower here, right? If they get that big run lower, we come over, and these bears, right, clobber it off that moving average now. Well, now that's going to be a 1, 2, 3 breakout, right? Mark up that low, mark up that low, mark up the high, find that sweet spot, and look for that short, right, off the top of that channel. And just so you know, okay, if you were to blow up this area right here, right, kind of zoom in on that area right there, that is usually going to be a combination setup. It'll usually be a buyer failure into a seller pullback. It'll usually be a combination setup, right? As we go back up to the high of that channel, right? We'll get above the moving average. The buyers will, of course, try to buy that pullback. You know, they're going to think it's going higher again, but it's not a bull market any longer. It's a bear market at that point. We'll look to sell, right, into those stop losses and then grab that pullback on the way down from there. So quite the opportunity if we can get that 1, 2, 3 breakout. I'll tell you right now, 1, 2, 3 breakouts are really, really great setups to be ready for them, right? Like right now, right? 1, 2, 3 breakout, mark up that, right? Mark up that low, mark up that high. Find that sweet spot. I mean, you can almost always rely on that pullback coming off. I realize it takes some patience, right? I realize, right, it's not fun to watch the trade go without you, to watch the market go without you, but we're not optimizing this strategy for more trades. We want better trades, right? There's no first place ribbon for the most number of trades every day. All that matters at the end of the day is that you make money. And the more you churn that account, the only person that makes money when you overtrade is your broker, right? You'll get a great, nice bottle of wine in your mailbox at the end of the year from your broker, right? You're paying your broker's Lexus payment with all those little scalps back and forth, right? But your account won't go anywhere, okay? If you want your account to grow, you've got to be more selective. And being more selective means waiting for, out of a range like this, we can't just blindly buy the breakout. Because look, a lot of times they come right back. Right? How do you know the difference? What's the difference between that breakout and this breakout? If you can tell the difference there, you're obviously smarter than I am, because there's very little difference technically between one breakout to the other. Right? Maybe this one holds, maybe it doesn't. There's no way of telling. So instead of just trying to predict it or crossing my fingers, closing my eyes, hoping for the best, 1, 2, 3, okay, now we know. Now that momentum has that fear of missing out in everyone's minds. Now we can grab that, right, hidden channel. And again, right, that follow-up pattern is a very reliable pattern from there. So now we're looking pretty good there, right? Now we're kind of looking good. And again, as I mentioned earlier, I'm just simply illustrating the setups and the areas I'm watching for tomorrow. I'm going to give you guys a lot more details on this stuff inside that free course, right, as we go higher. So again, once we, right, those 3 setups going higher, so we go back in, right, crown reversal, back down or back into the range, right? 1 try, 2 try, buy back up. 1 try, 2 try, sell back down. Keep your eyes open for those impulse moves, because you know what's going to happen tomorrow. Once we hear, right, the market will just go, will probably break in one direction. I couldn't tell you what direction it is right now. It looks very bullish right now, but for all I know, right, things could fall apart here in the overnight with China. So we shall see what tomorrow brings on that. Again, the S&P has some serious space to run if it does start getting cuckoo, right, tomorrow. So be aware of those 3 scenarios and leave that runner on the S&P. How about some Nasdaq right now? Nasdaq very similar here to the S&P 500. Nasdaq is bullish. Nasdaq finishes its session right up around the highs. That is a big psychological boon, right, for those buyers. We talked about this last night, right? Where they close the day in comparison to their highs or lows is a big deal mentally, right? Psychologically. The bulls right now, right, are walking around with their chest out, right? They're beating their chest. They're the king of the world right now, or queen of the world, right? The bulls are in full control. They finished right at the highs. Take that, right? That is the personality of this market right now. Now, at the same time, though, I would imagine a lot of buyers are seeing this as a good place to take profit. So it's not a great place to be buying here, but it definitely leaves the door wide open for another leg, right, running higher here. Now, where are these buyers trying to go at this point? We got one more major top up there, 78, right up top there, right? 78.41, right? 78.41 is that next major top. If things really get crazy, you've got that big round number and that next top up around that 7,900. So those are the key levels here as we go higher here tomorrow. If the bears do get control of it, they want to go back down to retest, right, that nasty headline low from 75.83 half area. Right now, though, sellers need a lot more than just a hope and prayer, right, for that reversal right now. They are pinned right to the upside right now with those bulls in control. So what do we know? We know we're starting to get that impulse move, right? Again, who knows what's going to happen here in 12 minutes when this market opens up here right now, right? Do we get that strong move up, that 1, that 2, and that 2 try breakout? Or do we get that 1, 2, 3 breakout, hidden channel pullback? Okay, that would be very desirable, obviously. Or do we get that run up and start going sideways up here? Right? That's also a possibility here for tomorrow. Find that level of support. Again, use the size of the range. You'll learn a lot more details of range-bound markets inside of our free course, which I mentioned right a couple times already. Grab that free course in the upper right-hand corner or hit that big red button below me tonight on the trading blog, there. And of course, once we find our range, we know the market is bullish. I want to buy underneath that range, right? Range-bound markets say buy low, sell high, avoid the middle. I want to buy underneath that range. What's the pattern? 1 try for the bears, 2 try for the bears, and back up, right? That basically is a breakout pullback failure. Let those counter trend sellers, let them try to sell it off that pullback, and we're literally buying right into those stop losses as we go. Now, speaking of sellers, how do we sell this market? Is it possible to sell this? You can, but we're very bullish right now. If you want to be a seller right now, you've got to be patient. Let those bulls wrap the rope right around their neck. Whenever I talk about reversals, I think about like martial arts. Karate, jiu-jitsu, and you have to excuse me, I'm not very well versed with this. I played a lot of sports when I was younger, but I never really got into the martial arts, so I do apologize about that. But one thing I do know about combat sports is that you use the body weight of your competitor against themselves, right? In your favor. So think of it that way, right? Just like an MMA fighter or a jiu-jitsu fighter or a wrestler, just like they'll try to use your body weight for their advantage, that's exactly what you're trying to do on a reversal, right? So as we go higher here, again, you guys realize range-bound market, right? Range-bound market, buy zone, sell zone, right? Sell back down to the range, buy back up into the range, okay? So a reversal, because we're so bullish, what I need to do is, it's not going to be enough just to have a level of resistance here, okay? Promise me you're not going to keep, and I did this all the time when I was a rookie, we can't just sell at a level of resistance because it's resistance. The market's too bullish. What will happen is, it'll pull back a little bit and then run you out of that trade. What you need to do is wait for those buyers now to commit to it and use those positions to your advantage. Okay, so here's how it works, right? As we pull back now, that moving average comes over. The buyers will try to buy it, right? Now at this point, If they're successful, that becomes the 1, 2, 3 breakout, right? And of course, we're buying the low of that channel, right? We have a plan for that. But if they're not and they pull back now, chances are those buyers who have all this control right now, they're probably not going to give up without a fight. Now, once we see it pull back, mark that high. Now you're going to see sellers come in and they're going to be waiting above that high. What's going to happen now is, as we see these buyers coming in here, I don't leave my orders just sitting on top of those levels. I know some people do. I wouldn't. That's way too aggressive. It's very dangerous to leave those resting orders like that because you're a sitting duck. You know, for example, tomorrow, right? Who knows? The media will say, the news will come out, right? It's a very dangerous type of trade entry. What I will do though is anticipate those buyers now. Now they've tried once. Now they've tried twice. Use their body weight to your advantage. Right now, what's happening? The buyers have gotten in with maybe half their position. They've loaded the boat now, right, on a full-size position. Obviously, if you're a rookie, you're all in, right, or all out. But think about the bigger picture here, right? Buyers scale into this move, right? They buy one here. They buy more as it comes lower. Now at that point, what do you think those buyers are going to do if they see a strong signal go against them? This is where you use their momentum, their body weight, right? Use their position against them. They're going to now have to get out for a loss, right? Once those buyers now try once, try twice, and they fail to run higher, I'm looking for a nice strong signal coming off that trap. And at that point now, I've got all the buyers now backed into a corner. And as soon as you get that strong signal, what's going to happen? The original buyers who got in right too early, they're going to get taken out real fast. The long-term buyers, right, they'll get taken up a little bit low, and the market will collapse back down into that trading range. Again, I call it a crown reversal, right? One try for the bulls, two try for the bulls, and back down again. Really, what you're doing is you're respecting the momentum of the buyers. You're letting those buyers load up their positions, knowing that it's not a very good place to be buying, and you're simply waiting for that signal up here, right? That now is a time that buyers are going to have to make a very difficult decision. Do they buy more or do they exit? Usually after one try, two try, those buyers are not going to buy more. They're going to exit, and that will slingshot that market back to a pendulum swing, right? Like back here, right? Amount of move up, amount of the move down, right? And the pendulum swing becomes that objective to the side, right? So the amount of the move higher here, be the amount of the move lower, right? That would be your target on that trade. Okay, again, it's called a crown reversal pattern. I talk a lot about this pattern inside that free trading course. You'll learn it obviously in much more detail, right, in our advanced classes as well. So what if we go back into that range? If we sit back inside that range, balanced, 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 what do we do at that point? We buy low, one try, two try, failure back in, or don't forget too, right, that one try, two try, failure, pullback, combination. The only thing you got to worry about for these patterns, the combinations is you don't want that pullback inside the range. It's a failure, it's a pullback pattern. The failure pattern's pretty good, right? Back here, one try, two try, failure, back in, right? Same idea there. Okay, you'll notice though, sometimes that pullback pattern won't get you in at the right spot, right? Sometimes that pullback is too close to that range. I just prefer to get in underneath the range rather than trying to trade inside the range. Now remember though, right, that same pattern now, well, let's put it this way. If it runs, right, if it runs through the range now, right, if it really runs that range now you want to let them try a couple times, right? So now let them try once, let them try twice, and then back up we go from there. Okay, remember, if the market dumps, right, if it really dumps off that high and it doesn't settle into that range at all, that momentum now be very, very strong. And because of that, you want to anticipate those sellers are probably not going to give up in a fight, right? They'll try once, they'll try twice. And right where we start seeing those bears trying twice, again, use their body weight, use their weight to your advantage, right? Use their position now, because the minute this thing starts to snap higher, all those sellers, They know they were going against the trend, right? And they're going to get out of that trade just as fast as they jumped in to make sure they don't take a bigger loss than they need to. And again, don't forget, if we do make that strong run lower, right, and they can hold that pullback and jump off that moving average, right, it's not enough to get a strong move down. But if they can hold that pullback, now I can mark that low, mark that high, find my sweet spot, and look for that sell off of that high. And again, as I mentioned earlier, right, that sell is usually going to be that failure into pullback combination. And you'll learn a lot more about that inside the free course. You'll see a lot of examples, right, of those failure into pullback combinations. So definitely make sure you join that free course to see more examples of these patterns, right? But for now, though, buyers have a lot of open space there above, right? Sellers have a lot of area down bottom here. If things get ugly, we're waiting on the headlines now. We're waiting on the deal for tomorrow, or will it be no deal tomorrow, right? That is, of course, an option as well, right? There's not a guarantee to get a deal tomorrow, right? We may have no news whatsoever as well. So last but not least here, over on the gold here tonight. Gold is a prime example of what we talked about earlier this week, and that is range-bound markets in combination with momentum. Range-bound markets and combination momentum. For example, we know we have that range, right? Nasty range. A range that only a mother could love, right? A very ugly trading range there. A strong move up into that range, right? That's a bull market into a range. What does that mean? Buy low, right? Sell high, sell high, sell high. Remember though, buying underneath the range is a lot more reliable because that momentum was bearish. Sorry, momentum was bullish, right? Try to make this as simple as possible, right? So bull market goes up into a trading range, you're buying underneath, you're buying underneath, you're buying underneath, using those failure patterns, right? Those failure patterns, failure pattern, back up, failure pattern, back up, buying underneath that range, right? You go above the range, nested, right? One try, two try, back down in. We wait for those two tries to sell back in above the range. Okay, that's the basic idea behind it. But now we see a very strong move down. Now, what do we need for a breakout, right? There's my range. What do we need for a breakout of a range? We need a 1, 2, 3 breakout, either going higher, right? They couldn't get it there, back into the range, or we need what? A 1, you got it, 2, 3 breakdown. Okay, so we haven't got that yet. I'm not going to deny it's a very strong move down. What I don't see, though, is I do not see that follow through for these bears right now. That, in my opinion, tells me this market is ripe to go right back up into that trading range at 1510, 1512 and change up here. The problem is I know I've got a lot of bear momentum right now. I want to be a buyer to go back into that range, or I've got to wait for proof that we have a continuation and we have a 1, 2, 3 breakout, right? I don't have that proof yet. So let's talk about, first of all, how would we buy this market going back up into that range? We know this thing is very bearish right now. We want to go back into the range. I talked about a reversal pattern earlier with you guys called the crown reversal, right? That crown reversal pattern. You'll notice strong move down. They've got that major 2 try. That lower low in price tells me that sellers got what they wanted. Now wait and see, right? Now wait and see. Again, it's not a 1, 2, 3 breakout, so we know the odds are still on our favor to run back up into that range. What I want is that crown reversal. Let's put it this way. There will be 2 basic. Well, let's do it this way. Let's do 3 situations to look for. One will be a crown reversal, right? That's a 1 try off the bears, 2 try for the bears, and a trap low, right? So imagine now, right? We get that trap low. That will be the reversal pattern. Again, I call these crown reversals, right? Crown reversals. Okay, again, we know we're bearish. I want to buy in a bear market right now. Just like trying to sell the E-minis or sell the crude right now, right? I'm going against the trend. So because of that, I want to let those sellers really take their time, right? And I always tell my clients, these types of reversals, they will take longer than you think they will. So again, 1, 2 for the bears. Look how I draw this. Make sure the 2 tries are higher, not lower, and get that trap low for that buy going back higher again. Okay, what other option we have here? Another option would be strong move up, hold the pullback, and jump. What is that? 1, 2, 3 reversal. Mark the high, mark the low, buying that pullback to that hidden channel sweet spot, right? And we are buying now on the way back up into that range. Remember, pendulum swing, right? Big old pendulum swing, right? The amount of the move underneath the range is the amount of the move back above the range. And again, you'll learn a lot more of these details. I realize if you're here for the first time right now, a lot of this terminology might be brand new to you, but that's exactly why I encourage you to grab that free course linked in the upper right-hand corner, or grab that big red button below me tonight on the trading blog. What else can we do here? What if it really jumps? If it really jumps up, strong move up, 1, 2. Again, you want to see sellers trying once, bears trying twice. Now we know where stops are. Now we know where pain starts, right? And we're buying into those stops. The problem is that when you have a big, strong run up, right, strong spikes up oftentimes come right back down again. So I don't recommend just chasing after it. What I do want to look for, though, is strong move up, profit taking, higher high, short sellers. Now I know where your stops are, and we're buying into those stop losses right as we go. So again, 3 different reversal patterns here, right? One would be a crown reversal. Again, two tries there for the sellers, buying above that low. Second one here will be that 1, 2, 3. This is the one that's easiest to find because it's very obvious, right? It kind of bounces off that trend line, bounces off that moving average, right? You find those 2 highs, you find that low, and now you know you want to buy off of that low, right? That's your 1, 2, 3 reversal, or right, it's that strong move up, right? That 1, that 2, right, and that go. So 3 possible buy setups here as we go. Don't forget, if we do run right back up now into that range again, remember that's one of those possible scenarios. 1 try, 2 try. You're buying underneath the range using that 2 try failure pattern. And I'll tell you, very, very common those 2 try failure patterns are, right, in range-bound markets. What if we go lower? If we go lower, be aware, you've got a lot of support down here, right? A lot of support down there. You've got that measured move coming off this high. I've got that first leg. I've got that leg. If you're familiar with Elliott wave theory, right, it's a 1, 2, 3, 4, 5, right, wave cycle, right? If you're familiar with Elliott wave theory, that's how I see it at least. So I would imagine we're going to probably get, right, that measured move. If they blow right through that measured move, what will happen is instead of using the equal, most of the time in Elliott wave theory, that leg number 1 and number 5 are almost identical. If you get a very strong move, though, that number 3 and 5 become identical. So if we go right through that measured move, then you know, measure that leg, right, and that creates that next target from there. Now, obviously, right now, we don't know enough yet, right, to know which one we're going to get here. We know we've got that low at 92.1. We know we get that measured move right there. So really, at this point, it's going to be very difficult to sell low here. There's not a lot of space down here. So what you want to look for is, clean this thing up here for us, right? What I want to see right now is, I want to see, first of all, show me you can hold it, right? Show me you can actually hold this move going lower. Then I'll mark up that low. I'll mark up a new channel, obviously. And now we'll start to structure that trade now, looking to sell off top of that channel. The problem is they've really got to get a lot of strength right now, so we're not trying to sell right into that area. The ideal scenario here would be a move lower here, get that trend line down, use that prior low as my key area of resistance, and get that run from there. Right? And remember, those types of patterns, right? That pullback to low of that hidden channel, those are oftentimes going to be that failure into pullback combination, right? I can't go into too much detail on it right now just because I'm limited space here, right? But imagine if you blew up that area right there, right? We go above the moving average, off the top of that, right, of that channel there. All right, guys? So again, a buyer failure off the top of the channel into a seller pullback. Our target from that point, right, is that 1480.4 here. All right, guys, as always, make sure you follow the direction of the market's momentum, right? Make sure that momentum is front and center. That's what makes this buy so challenging, right? Got to wait for that crown reversal, right? Or those rallies back higher here. Again, tomorrow morning, don't force it. Right? Don't force it. If things start getting sluggish and sloppy and choppy, right? Don't force it, right? And remember, we're going to get together every morning, 8 o'clock Eastern time, Monday through Friday, and we'll trade the strategy together. That way you don't have to waste time and money by taking a bunch of rookie losses that most of us have no choice but to kind of suffer through when we're learning, right? Let me shorten the learning curve for you. Come out, join us every morning, Monday through Friday, 8 o'clock Eastern time, and we'll trade the strategy together. Now, guys, getting started is pretty easy. If you're on YouTube right now, I'll put all the links, the description of the YouTube video. Right? I also put that link up top for that free trading class. If you're on the website right now at Sideways Markets, there's a bunch of buttons below the video tonight on the blog at Sideways Markets, or head over here to the website here at School of Trade. The advanced course is what you want. The advanced course includes all access, unlimited access to everything that we do, all of our video classes, all of our trading sessions, all the tools, all the templates. There's a video right there you can watch, right, regarding that advanced course. And don't forget, if membership isn't quite ready for you right now, that's perfectly fine by me. I would encourage you to grab that free trial right to the left of my ugly mug tonight. With the free trial comes your free pass to our trade room, our free trading classes, hundreds of examples of how we apply this strategy to our favorite markets. And if you have any questions about anything we talked about tonight, don't forget, drop those questions in the comment section below or call that toll-free phone number. Use that live support tool, right? There's no question too big or too small as far as I'm concerned, because I know you might be alone at your computer watching this video right now, but you're never alone on your journey to becoming a consistently profitable and confident trader. Guys, thank you so much for being here this week. It's been a great week. We got one more kind of slice of a day tomorrow. Be careful tomorrow out there, right? If the markets are pretty jittery, keep an eye out for those impulse moves. And as always, don't forget, Monday is a holiday. No newsletter on Monday. We'll see you guys in the next edition of our newsletter next Tuesday evening. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? Have fun this weekend, right? Make sure you're safe. Have some fun out there, right? I'll see you guys next time. Adios, amigos. Bye-bye for now.